Are you a trader? Are you confuse order block and breaker block, or you don't understand how they work? Right, so in this video I'm going to show you how to spot and identify order block and breaker block so that you don't tend to miss any of your trades. So stay tuned and watch to the end. So I can guarantee you that after watching the video to the end, you actually understand order block and breaker block like never before. It's going to be very simplified to your understanding. So stay tuned. So for instance, for the sake of this course, I'm actually going to paint order block as green, and I'm going to paint breaker block as red. So I'm actually going to tell you the reason why. But first of all, let us start the video. So right now, so what is order block? So order block is the last candlestick before an impulsive move towards one direction. So in most cases, that candlestick is actually an opposite color to the impulsive move that move towards one direction, right? So with understanding, it is believed that the order block is the zone where smart money or large institutions actually place a pending buy order or a sell order before making an impulsive move, then waiting for the price to return back to that zone before finally triggering that order and move to the direction, and therefore that's how they actually cash out. So right now, let us dig deep into the order block. So order blocks, there are two types of order blocks. The first one is the bullish order block, and the second one is the bearish order block. So one of the easiest way to identify a bullish order block or a bearish order block is using this principle that price action trader use, which is the W pattern and the M pattern. So the bullish order block follows the W pattern, while the bearish order block actually follows the M pattern. So for instance, this is a bullish order block. It goes like this, right? So here is actually called the bullish order block here. So it easily identified using the W pattern in price action. Then the bearish order block is identified using the M pattern. So price actually comes there, then it tests the zone and finally falls down to the down direction, right? So this is the bearish order block right here. So let me label it. This is the bullish order block, and this is the bearish order block. Right, so this is how to identify the bullish and the bearish order block. Is very, very simple. All you need to do that, first of all, for instance, if you are moving in the in the upward direction, as if the market is bullish, all you need to do is that Wells market moves in this attitude, then it now comes like this. So it moves maybe something like this. Then you just mark this zone like this and you wait for price. So here's your bullish order block. So then you wait for price to actually come back to this zone, test this place, then finally move to the upward direction. Right. So this is how to identify and mark your bullish order block. Then same with the bearish order block. So the bearish order block identifier has your price actually moving towards the downside, then price now goes like this. So when you see now price move this way, you would mark this zone right here. So this is the bearish order block. Then you wait for price to actually come back to this zone. Then you move to the downside. Move to the downside. So this is a simple representation of how order blocks actually looks like, both in the bullish side and the bearish side. So okay, now I want to move to the breaker block. So the breaker block actually follows the same W and M pattern. So the only difference is that the W and M pattern kind of forms an incomplete or an immature. It doesn't form in its complete manner, right? The way how it's also expected. So because of that, it is regarded as it failed to form. So that's how just, so when you think of breaker block, just see it as price failing to form what it's also form as a result of the other block was weak. So another thing that you need to understand about breaker block, that is actually means that there's an other block that was greater than the breaker block that actually failed. So the breaker block is actually an other block, but it was too weak to hold price towards the direction it ought to hold. So the other block that was stronger than it actually pushed price above the breaker block. So whenever you think about breaker block, always remember that it's actually a failed order block, and it failed as a result of there are other blocks before or after that a breaker block. So this is how it looks like. So there are different types of breaker block. You have the bullish order block, I have the bearish order block. So the bullish order block goes like this, right? So it's also form an M pattern. Price usually hold at that order block, but this time around, this is why I paint it red, is because it actually failed. It could not hold price. So as a result of that, price actually broke out of this zone. So whenever I see this is identified as a breaker block. So in a very simple manner, breaker block is a bearish order block that failed, and the bearish order block has an M pattern. So it's an M pattern that fails to form, right? So anytime you identify a bearish order block and you find that it doesn't form the way it's supposed to form, then you know that this has actually become a bullish breaker block. So it's just more like the reverse, right? So for instance, a bullish order block, when it fails, turns to a bearish breaker block. Then a bearish order block, when it fails, turns to a bullish order block. So let me just put in physics, it goes like this, like a bullish order block is inversely proportional to the bearish breaker block. Okay, then the bearish order block is inversely proportional to the bullish breaker block. So this statement I've just written here is something that it will help you to understand the relationship between order block and a breaker block, right? So they can never be a breaker block without an order block. So all of them are order blocks. It's just that the breaker block is weak. There's a weaker place where smart one actually place order. So other smart one or live should actually place a bigger order that actually broke, the order block of other smart money and traders. So that's why it actually failed. So it is believed that when you see a breaker block, price actually returns back to the breaker block, then finally moves to the right direction, right? So this is actually what they call a bullish breaker block, and it happens when a bearish order block fails. So let me just write it there. So a bullish order block happens when a bearish order block fails. And so this is just exactly how it is. Then if we now want to do the bearish breaker block, so it goes like this. Price actually moves like this, then it finally moves, then it's supposed to form a W pattern to hold price, because of there is another block here that is stronger. Right, so this is actually another block. So because of the original price came from this other block, which is actually stronger than this bearish breaker block. So because of that, price actually broke out of this zone right here. So it is believed that as price has broken out from this zone, price actually going to return back to this bearish breaker block before finally moving to its required direction, right? So let me do this one for this also. So this is an order block. So this is also called a failed order block. Which is the bullish breaker block. So this order block is stronger than this order block here. All right, so because of that, it actually broke the price coming from this order block is stronger than this other block right here. So price couldn't hold it. It couldn't make it to fall towards this plate. So couldn't make it to come down, right? So because of that, price actually now broke. So because of that, here is now a failed order block. So it is required that, if you are taking order, you're going to take order from this failed breaker block, right, before price moves to the right direction, right? So then let us go to the charts and let us see how we can identify the order block and the breaker block. Right, so as you can see right here, this is gold. So if you look at this, remember as I said that another block is the last candlestick that actually happens in the market before an impulsive move towards a direction of the market. So if you can look at this now, the other block is this. If you look at the other block, is actually so this is the other block right here, this blue one. So it's the last one that happened before this massive movement happened. So I just drew it out, hoping that, and if you can see now, price actually came return to that place and now finally moved down to the down direction, right? Then also looking at this right here, this is the last candlestick, this blue candlestick before price actually moves in a very fast direction. So whenever I see this, you just mark this zone as your order block, and you can see price actually came to this zone, though it kind of liquidated this zone, then came back and finally moved in his right direction. There are also here also the same thing, right? So if you look at it, this is actually the last candlestick, which is this zone here, this one here, before the price actually moved in a very forceful direction. So price came back to this zone and finally moved in the right direction. So the same thing here also. This candlestick here is the last candlestick before this strong impulsive move towards the down direction. So you mark it and wait for price to come to that zone. Then finally it now move to the next direction. So this is the breaker block now. So a breaker block happened because there was an order block that was stronger than another order block. So for instance, the other block that was stronger than this breaker block is this one here. This is it here. So this one can name it as a strong order block. Alright, so when price actually with the forceful direction moved here and broke out, so it requires that price will come back to this breaker block, then finally move in his direction. So again, this other block also is still breaking. It's still breaking other blocks. So this is actually the stronger one that is causing all this break of other blocks. Right. So price actually came. It actually broke out of this zone. So it returned back to this breaker block and it finally moved. Then this is the other block, right? So other block is the last candlestick that is formed before an impulsive, before it moved to his direction. So as you can see, this is the last candlestick here, and price, and I've marked my other block here. So if you look at it, price actually broke. It didn't form. It also have come to this zone, touch here, then move to the outside. But you can see that that's not what actually happened. It broke through, so it failed. So it's believed that price actually come back to this one and finally start moving. So again, this is the last candlestick before an impulsive move. So we'll mark it. Then when price was to form a W pattern, it failed to form a W pattern and finally broke. There's believed that same order block that has come to a breaker block is still a valid zone to actually tap and move to the upside. Right, so this is how to identify an order block and a breaker block. So, but in my next video, I'm going to talk about the importance of break of structure. Now, to be very, very sure that you have a breaker block or another block, you must understand what break of structure actually looks like. If you don't understand what break of structure actually looks like, your order block or breaker block will not be valid. So if you want to understand what breaker structure is, I would like you to watch the video on the screen, and I hope to see you there.